What's up, everybody? So I was a little bored, so I figured I'll do a live stream. I just got a webcam today. I installed it just now. So if somebody can let me know in the comments, do you see me okay? Do you hear me okay? I just want to make sure it's working. I think it's working. It looks like it's working. So we'll talk about tariffs. But before we talk about tariffs, can you confirm it's clear, the picture, that you can see me and hear me before I spend any time just talking and nobody could actually hear me? Hope you have a good weekend. Yeah, just throw a comment out. Let me know if you could see me clearly, because I just installed this new webcam. And we'll dig into tariffs, but that's a big topic. Yeah. So let me know a quick comment before I dive into tariffs, because I just installed the webcam. Let me know. Can you see me? Is it clear? And can you hear me? Anybody out there who can just tell me? I'll write it. Maybe you can't hear me, and that's why no one's commenting. Can you hear me? Can you see? Can you see me? I just installed. A new webcam, and I want to make sure it works. In the lower left, can hear fine. So in the lower left, so you could see me. Like, it's a clear picture. I'm saying it's not like a blurry or whatever. Okay, so let's talk about tariffs. Tomorrow I'm doing a live stream with Victor. Victor. Okay, so everything's good. Okay, just want to make sure. Victor H Investing, I think his channel is. I've done a bunch of streams with him, and I mentioned we should talk about tariffs. We'll talk about different things. But I have scrolling at the bottom of the screen just to really what a tariff, the purpose of it. I mean, really, the purpose of a tariff. You guys probably know this, but it's just revenue, government revenue. That's why the government. That's how they stay in business, from taxes. A tariff is just a tax on a foreign country that exports into our country, and every country has tariffs. Milton Friedman, if you want to learn about JB Weld, thank you. Always so generous. I really appreciate that. Watch Milton Friedman. He's an amazing economist. And in like the 40s, 50s, and 60s, he was more well known. He must have died a while ago, but there's plenty of YouTube videos on him. It's not like he's that old. He was pretty popular in the mid 1900s. But he had a good quote, and I wrote it in my phone a while ago. So the best anti-monopoly is not government intervention. It's free global trade, removal of taxes and tariffs. So if you want a strong economy, you eliminate taxes. Taxes are what we have to pay to the government, and tariffs what have other countries have to pay to the government just to operate in this country, and it limits things. What's the? I mean, there is a benefit, of course, but does the benefit outweigh the negatives? So it's government revenue, but I think a lot of times the government, or at least the way they spin it, is it protects U.S. companies or U.S. industries, because, like, for instance, well, the most common thing that's imported is like electronics, computers and things like that. So if say a company say a company makes, in order to manufacture a computer, it costs a company, say, $200. That's from all the parts and paying people to make it, and they sell it for $800. That's because they could import a lot of the stuff from China and get it for a lower cost than US. So this is a company that pretty much imports everything. So the expenses to make computer, the revenue from the sale of the computer, and a profit. So this is strictly importing from China because it's so much cheaper to import from China. Now, if that company didn't import from China, say that competitor, right, is everything's US made, so it's double. They have to it costs them $400 to make that computer because labor in the US is more expensive, parts in the US is more expensive. So the profit is lower. So why would anybody ever import from China? Why would anybody ever make it in the US? Just import from China. Now, what the US government would do in this case is they would charge a tax, a tariff, to anything that's imported from China, any electronics that's imported from China. I'm just kind of making this up as I go along, just to kind of explain it. So this is a no tariff situation. So it's really profitable, right? The computer costs $200 of inputs, expenses. They sell for $800. U.S. made. So the government charges a tariff. So all those products that this company imports from China, now they have to pay a tax on top of it. So if the U.S. government charges this tariff, now the expenses go up. So if they charge a $200 tariff, like it doubles the price. So now if the U.S. government does this, it doesn't really matter if a company makes it in the U.S. or imports it from China. It still costs them to make it still costs $400 to make this particular computer. Same profit. Now, if tariffs go even higher, so the U.S. charges even more taxes to import from China, which they can do, and now it costs $500. So what would happen in this situation if a company imports from China and it costs them $500 in expenses to make computer, and they sell for $800? Right, they're gonna start making in the U.S. So that's how the government spins it. If we charge high tariffs, then it will be not in the best interest of the company to import from China. It will be the best interest to make it in the U.S. and supply more jobs in the U.S. So tariffs protect domestic companies. So that's kind of like the high level. I'm not saying it gets a little complicated and convoluted, but that's the purpose of it. Another reason. So number one is government revenue. That's the number one reason we have tariffs. And the number two is protect U.S. companies. And the third reason is that we're just being a bully. To like, if it's kind of like if you have a friend you don't like, you may not give them a discount. Like they come to your store, right? say you have a customer that comes to your store, and you sell products for $100, you would never give that customer a discount because you just don't like them, and you actually don't even care if they don't shop at your store anymore. But if your friend comes into the store, or a customer you really like, you may charge them $90, $80, or a family member you charge less. So it's kind of the same thing with the U.S. If they don't like a certain country, they could just bully them around and start charging a lot of tariffs. But they just the expense usually gets passed on to the consumer. So in this case, if tariffs got really high in China, these companies would stop making in the U.S. because it's cheaper to make in the U.S., right? But usually it doesn't get to this point. Like what would happen is, if there's no tariffs, it costs this company $200 to make a computer, and then the U.S. would just add tariffs onto it, and it will cost $300 with tariffs. So it's still cheaper to import from China, but the cost gets passed on to you, the consumer. And there are some products that are prohibited from being imported into the United States. So there's not even like a risk of like certain industries. Like you can't import like a lot of food into the United States. I think like beef and dairy. I think there's restrictions on importing stuff from other countries. So I believe Trump tariffs ought to lever power. Richie, yeah. So a lot of what Trump does is about exerting his control, his power. And I have that with my business too. Like if there's certain people that just give me a headache, certain customers, I'll never give them a good deal or even overcharge them or charge them the highest because I just can't stand them. So it's just a way for him to exert his power and control over another country. And then it's retaliatory, right? And if I charge my neighbor $100 for a product, I never give them a discount. When I go to their store, they never give me a discount either. So then the other country will raise their tariffs, which could be bad because if some countries we don't care about because we don't import from certain countries, we don't need anything from them, so we really don't care. But other countries like China and of course our neighbors, Mexico and Canada, we import a lot from those countries. So we want a good relationship with them. But we export a lot. I think we're the biggest exporter in the world. We're definitely actually China is the biggest exporter in the world. We're second biggest exporter in the world. But let me know if you want me to do a DCF. JB Will, thank you. You're so generous. I really appreciate that. Do you see this transition to a new tariff economy to be smooth? You know, I don't think it's going to be I don't think it's going to be much change. It's not like he went from a zero tariff country to like tons of tariffs. Yeah, sure. He is putting a blanket tariff. What is it, like 10%? But it's not like there were tariffs. Like it's not like it's nothing new. I don't really see much of a change. It's always the same thing when there's a big disruption in the market, like with inflation. What happens? Prices adjust. In the short term, when there's rampant inflation, in the short term, companies are squeezed and they don't make profits or even lose money. But they adjust prices, they raise their prices, and then it's back to normal. So there's always going to be some noise. And as you can see in the market, there's a lot of noise. I think I lost like a couple $100,000 last week, but I don't care. I know it's going to come back. But if you trade volatility, this could be a great opportunity, because I do see in the short term lots of downside, but it'll adjust and come back, and it'll be stronger than ever. Because if you're looking for you get great deals, right? There's a lot of, what is this? This is not okay. If you get a really good discount now, if you're looking, if there's certain companies you really like, I mean, even if you want to go as like as let me go to, I can't stand Yahoo Finance. It doesn't seem to work anymore. Like if you wanted to get into Nvidia, or if you wanted to really get into Tesla, you're getting a discount now. Even the S&P 500, it was over $600 at the beginning of the year, which was its all-time high, right? So it was over $600 in the beginning of the year in February, and now you get a $500. So you get a, what is that, like 606, 611, a 505. So you can save 106. So you get a 17% discount. So if you had the opportunity to buy the S&P 500 in February, you would have paid 611. If you held out, now you get a 17% discount. That's a good deal, right? It's kind of like it's the same thing as if you wanted to buy a car, and cars don't move around like the S&P 500 does. So if you wanted to buy a car and in February you were looking for a car, it was $40K, and now you're looking at the same exact car, it's $33K. You're probably going to buy the car because you needed the car. You just didn't want to pull the trigger. So you're getting a good deal. And if you buy it now, you save 17%. If you wait a few more months, it might go down another 20, 30%, or it might go up 20, 30%. I don't know. I know now you save 17% by not buying S&P 500 2 months ago. But that's a broad market, right? What about Tesla? If you held out on Tesla, the most generous person on my channel, Bum Spanker. Thank you so much. That's so nice of you. It really means a lot. Tesla, at the end of 2024, so not long ago, we're just talking 4 months ago, it was 460. Khaled, that's your name, yeah. TEM. Remember I was telling you to buy Berkshire Hathaway, all that cash. He's sitting on all that cash, and what can he do with the cash? He gets a discount. We don't sit on cash. Most companies don't sit on cash. I'm not saying it's a good idea to sit on cash, but in his case, he's saving a lot of money by sitting on cash, and now he could pick up great deals. That's why Berkshire Hathaway is only down like 5-6%, while the market's down 17% in the same time period. Because Berkshire Hathaway is kind of like the market. Like if you look at their portfolio, it's probably and you track the stocks within Berkshire Hathaway, it probably moves with the market because they have. Let's go TEM. But he has 300 billion of cash. But if you have 300 billion of cash, you have to look at the whole company. Like if I had 100,000 of cash, that does you have to compare it to somebody else. If somebody had 100,000 of cash and their net worth was $100,000, then they're 100% cash. If I have 100,000 in cash and my net worth is 5 million, it's a different story, right? So you always have to look at things as a whole. So let's look at TEM. It doesn't matter if they're cash flow positive. It just makes it a little more trickier to do an DCF. 43, 7.3. So I have my fast DCF model. You just have to make a little more assumptions. Let's look at their financials. Is this an American company? I'm going to start doing finance classes at the community center because I just opened a new business in a different part of my county, and we work with the local community center to do classes. And I'm going to start doing like finance, stock market 101, things like that. It's a lot of fun for little kids, like elementary, middle school. So they have negative free cash flow. That does make it a little more challenging. Let's just get a little more info on them. Is anybody familiar with TEM? Tempest AI. Let's see what the analysts say the future growth is of the company. So they do project positive free cash flow. So a way to, if a company has negative free cash flow, you need to figure out when will they have positive free cash flow. And that could be tricky. But a way to do it is you look at the revenue, and you could look at the revenue performance. And if you see the revenue is going up 20% annually, for example, you can grow the revenue 20%, say for another 3, 4, 5 years, and then you can assume they would convert. You'd probably want to look at industry peers, but generally a company that converts 10 to 20% of their revenue to free cash flow is about the right target. Not all companies can convert 50% like NVIDIA. Some companies like supermarkets only convert 1% of their revenue to free cash flow, really tight margins. But an AI company, I think a 20% conversion makes sense. So you can see the analysts are projecting revenue to grow to 1.9 billion by 2027. They also have their free cash flow, which is 76 million. Because margins do grow as revenue grows. Let's just assume 3 years out, they have 1 billion of free cash flow. And you could see their revenue is projected to be 1.9 billion. So that's a little aggressive, 50%. Let's dial that back a little bit to 300 million. I think we probably should go out another year or two on this DCF, but it seems like the stock is slightly overvalued. I'm at 33. It's hard. This is the problem with certain companies. The stock gets pushed up so high that it never seems like good value. It's kind of like Amazon and Tesla. If you look at those companies, the first 10, 15 years, they were losing a lot of money, but the stock was still so high. Those companies met the demand, met the market demand, and grew to levels they were expected to grow and beyond. Most companies don't do that. So this seems like it's overbid. Why is it so? Is this like, how about Guardian Health? Let me just Yeah, let's do Guardian next. I just want to. Usually, the first thing I do about when I look at a stock, if it's a company I'm not too familiar with, I just want to understand what they do on a higher level. That's the first thing I do. I mean, I'm not going to do that with Tesla. I'm not going to learn like what do they do because I know what they do. But a company like this, I just want to understand what they do because in order to scale and grow, you need to provide some type of product or service that a lot of people would use. Like if a company sells smartphones, it's a pretty big audience, right? A lot of people will buy a smartphone. But if they sell something more unique, the audience shrinks. So, okay, it's a health technology company established. Tempest uses AI to create precision medicine services, including diagnostics. So that's a pretty big market. When you use AI to enhance the medical field, that seems like a good business model that's scalable. Please. So, but let's look at the other one, Gardent. So I would say that's overvalued at this point, but doesn't mean it won't go up in price. It just means the market is not giving it a break. The market is projecting lots of growth in the future. And will it hit those targets? I don't know. Let's see, Gardent, also negative free cash flow. Let's see what the analysts. The analysts say. Okay, they're projecting negative free cash flow for the next few years. But let's look at the revenue forecast. So they're projecting 1.3 billion of revenue by 2027. Let's just say they converted 150 million. So this seems like you're going to need a few more. You have to go beyond 2027. So to see if it's going to be positive. But just because the stock is overvalued doesn't mean it won't go up because a lot of people are kind of looking at this stock. It's a lot of stocks, a lot of people are looking at. It's a biotech company based in Palo Alto, Gardent Health. It's a hard word to say. Gardent. It produces liquid biopsy tests to deter cancer from mutations and other modifications of blood samples. So let's see the past revenue growth. Also, if you're a short-term trader, you want to look at the stock, how it's performed. So it was 165 a share. So if you see a stock, if your goal is for the stock to hit, right now it's 43. If your target was, okay, if the stock could hit 100, I'll exit the trade. And then if you look at the past, and they were well over 100 at one point, that should give you a little more comfort that it can get to over 100 again. Doesn't mean it will, but it's kind of like if you did something in the past, you're more likely to do that same thing in the future than if you never did it. If that makes sense. One last one, JDE Peets. They publish their financial results in euros. They are listed on the Amsterdam Stock Exchange, SHADEP. Oh, Peet's Coffee. They're Dutch. They're a Dutch company. It's a good brand. In the US, a lot of us like Pete's. Okay, nice positive free cash flow. It hit 1.4 billion, but even if we take 1 billion, the good thing about euros is it's pretty similar to US dollars, so there's not much. But I have an exchange rate. I think it's 1.08, the exchange rate from euros to US. They probably pay a dividend as well. That's a 3.6% dividend, so it's a really good yield. So this seems undervalued. But like the DCF is more geared towards a company like this. But if you're looking for like real growth, like you want to like 5x your money, you're probably not going to do it with a company like Pete's. Just Pete's is a stable company, pays a good dividend. But if you want to get a consistent return, you would go with a high dividend paying stock. TI and Vital Farms. But it's an American company. They sell software to hospitals to diagnose. Yeah, I'm. Did you guys know it's a Dutch company, Pete's coffee brand? Because there's lots of Pete's in the U.S. In California. It's probably pretty popular in other states, but I definitely know it's really popular in California. It was acquired by the private equity firm Jab Holdings. Jab is a German company. The company owns over 50 beverage brands. It's probably the company closest to Starbucks in terms of brand name revenue. In the U.S., if you were asked what's the biggest coffee chain other than Starbucks, most people would say Pete's. What do you guys think? Do you like Pete's coffee? Now that's interesting. Who's getting killed in the market? I have new holdings, and I picked it up at. I put like 25,000 into new holdings, and that 25 was close to $100,000 because I got it at 4.25, and at the peak, I was up almost 300%. At the highest point, it was $16. It's come down a lot since then. I'm still up. I'm up probably 120%. Let me I'm probably getting crushed on my let me open my portfolio. I don't even like to look at it sometimes. Let's see. Oh boy, I'm down. Yeah, I'm down about 200,000 in just this portfolio. And I have other portfolios. Because I was at like 1.7 million. Look at that. On Friday alone, I lost $100,000. Just on Friday, I lost $105,000. But you know, it doesn't bother me at all. It just creates buying opportunities. Okay. Oh, here's new. I was looking for new. I'm like, where is new? So new, it's worth 43,000. Well, what happened? I'm only up 126%. At one point, it's up 200+%. But Berkshire, it's holding steady. I'm up 180% on Berkshire. I bought one share for $262,000. Now that one share is worth $740,000. ET, I did some kind of options trades and a little more risky. I just put like $10,000 into some high risk returns. Lumen, I'm down 66%. That's just I bought the stock outright. But Master, I shorted Master. I'm down 64% on that. I think I put $2,500 into Master. Master, they buy Bitcoin. They buy Bitcoin using convertible debt. So they issue like tons of convertible debt, like hundreds of billions of dollars of convertible debt. And once when they people bought the debt and didn't get any interest, zero interest, and people were still willing to buy the convertible notes because convertible debt is debt you can convert to equity. So you can at any point you want, you can convert the debt of Master to stock, to equity, to actually own stock in Master. And with Bitcoin, they lever Bitcoin. So if Bitcoin goes up $1, that stock goes up $2. But Bitcoin, I shorted Master when Bitcoin was like $105,000. But my timing was a little off. It wasn't bad timing, just slightly off. So at the peak, Master was $470 a share. At the peak. So you can see it was as low as $11 in 2022. So it went from 470, it fell to 240. So almost 50%, almost exactly cut in half. And then it came up, but now it's at 290. So slightly off with timing, but not terrible. So my Meta is still doing well. I have Meta. I bought it at different points of time. I think 140. But if you can lose $100,000 in one day, holding my type of stock, you're probably doing well. Because you have to have a good amount of money to lose $100,000. Okay, so what other yeah, but it's hard to just sell. Like if your stock is up a lot, you can't just, what are you going to buy with it? Sit on cash? Nobody knows the right time to buy, the right time to sell. Nobody knows for sure. So what you do is just ride out the ups and downs. Oh, we never really talked about tariffs. But you should look up, like, just on a high level. I use Investopedia a lot to learn stuff. Even stuff you know a little bit. Sometimes there's like little nuances that you don't think about. Neil, what's up? But my house, they illegally sold. Wait. Looking at Google. Okay, so what is tariff? Most countries are limited by their natural resources, because in certain countries, like, they just don't have access to certain commodities, so they have to import it. Like if you want to buy something and it's only sold by a certain company, only a certain company sells something you want to buy, you have to go to that company. But it's the same thing as so it's just on a global scale. Like you can buy milk from a lot of places, the supermarket, the corner store, but other products is not as accessible. So governments impose tariffs. So the real reason is to raise revenue. So who pays? Who pays for tariffs? It's the U.S. company. I'm talking about companies that export to the U.S. If Trump charges a tariff, it's the U.S. company that has to pay the taxes, right? Because they're the ones who are buying the product from that foreign company. And the U.S. company, they don't have to raise prices, but they probably will raise prices if it costs them more money to import. So it usually gets passed on to the end consumer. But it's kind of like if you have a business and a certain product is more expensive. Say you have a grocery store and eggs double in price. You don't have to charge your customer more money. You can just eat the loss. But most companies can't afford to just eat all these losses. So eventually they do have to pass it on to the end consumer. So it usually affects the consumer, the person buying the product. Because even though the U.S. company actually pays the tariff taxes when they import, the really end result is the consumer. Tariffs have a long and contentious history, and the debate over whether they represent good or bad policy still rages. I mean, I think it's a waste, taxes. I think if the government just didn't interfere and let supply and demand exist, then things would be so much more efficient. It's kind of like if you're Apple and so many people want to buy your iPhones, it's because you provide a good product. And if you can raise prices to be more profitable, that's great. Anybody can come into the market and sell smartphones. If they have enough funding, they can do that and compete with Apple. A lot of companies have tried to do that. But it's just annoying that the government has to interfere. Like if you're a smoker, you probably know you're getting killed on taxes. It just keeps going up. They get, like, people like people who smoke and other products just get hammered on taxes. But it's kind of a low-hanging fruit. If the government needs money, they're probably not going to make it more expensive to buy apples. They'll do something like on alcohol or gambling or cigarettes, because less people are going to complain. So tariffs are used to restrict imports. So the higher the tariffs, the less the U.S. will import, and the more likely the U.S. will be to make it in-house. Simply put, they increase the price of goods and services purchased from another country, making them less attractive to domestic consumers. A key point to understand is that a tariff affects the exporting country because consumers in the country that impose a tariff might shy away. It's all interconnected, it's all kind of convoluted. Who do tariffs affect? It really affects everybody. But if you're making a product, right? Just say you're a company in the US and you make a product and you sell that product. The more you charge for the product, the less people will buy it. Certain people will buy your product even if you double the price. But at some point, like if you raise cows on your farm and you sell beef, if you sell it for $5 a pound to the supermarket, they may buy, I don't know, 100 pounds. But every dollar it goes up because maybe there's more taxes or just things cost more money. Cost per pound. Okay, and so pounds sold. So if you look on a chart, every dollar you charge more per pound, you lose 10%. So if you start selling your beef for $7 a pound, now you could only sell 81 pounds. And $8, 73 pounds. It's just like any product. When you start charging more money, less people will buy it. But you have to also look at how much you will sell, because sometimes raising prices, you'll make more money. Assuming you don't lose too much in sales, like too many people sold it. So if you sold beef for $5 a pound, you would be able to sell 100 pounds. So that's your revenue, $500. Now your revenue goes up by charging more money, even though you sold less. And say you went to $7 a pound, it still goes up. It's probably like, let's just say $8 is the real breaking point when it drops a lot. So you'd only sell 50 pounds at $8. So now your revenue is lower. If you guys take in economics, it's just a supply and demand, and then you could see the most efficient point. But even if you make more money, that's not always a good thing. It is in the short term, but then if you start making too much money, then competition comes in and they sell it for a low price. So then you have to lower the price. Okay, so key point to understand is that tariffs, however, if the consumer still chooses the imported product, then a tariff has essentially raised the cost. So there are two types of tariffs. A specific tariff is levied as a fixed fee on the type of item, such as $500. So every car, in this example, every car that's imported into US, there's a tariff of $500. So if a company in the US wants to import a car from, say, another country, Mexico or China, they would have to pay $10,000 for a car, for example. And the tariff is $500. So it costs them for that car $10,500. How will tariffs affect inflation? I mean, it's hard to say. It depends, because if tariffs reduce the demand, then it could have a negative. It could help inflation, lower it. But most of the time, generally, when taxes go up, things cost more money, and people have to spend more money. So it probably 99% of the time it's going to lead to higher inflation. Governments may impose tariffs to raise revenue, protect the companies in their country, protect national interests. So tariffs can be used to raise revenue for the government, because the government benefits. The only entity that purely benefits from a tariff is the government that is charging the tariff. So the US government will benefit. Now the issue is, if a lot less products are imported into US, it could lead to lower revenue for the government. Because if Trump raises tariffs enough, and say a country will not export to the US because it just costs too much money, that could lead to a lot of problems. And everything's short term. All the problems are always short term. In the long term, things adjust and fix themselves. For instance, in 2018-19, Trump imposed tariffs on many items to rebalance the trade deficit. Also, there's a trade deficit another time. So, okay. How much does the US import? Okay. Import $3.2 trillion. How much did the US export? I think it's like 2.9 trillion. Let's see. Okay, 3.1. So the deficit is 0.1 trillion, or 100 billion. So we import more than we export. So there's a deficit there. Some countries, it's the opposite. They export. I'm sure China exports more than they import, which is good for China, because the more sales you have as a country, the better it is for that economy. But we consume a lot. We're big on consumption in the US. We consume more than any other country by far. So if the deficit is too wide, that could lead to problems as well, which we've had. Okay. Okay. So the amount exported by countries, you probably didn't realize, but the US exports a lot. They're second biggest in the world in terms of exports. Because think about it, if you're a business, right? Just think of it from a business point of view. If you own a business, and that's how so if you own a business and you import, I know you're probably not going to be importing from other countries. When I say import, I'm just means when you consume, when you buy. How much money do you spend? Do you buy things for? Because you have to buy materials, you have to pay for your employees. So how much money do you spend? Do you buy? So I'm calling that import. And how much do you sell? And we can use the word export to sell, because I'm sure you're not selling to other countries, but you're selling locally. So how much money do you sell? Say $150. So the profit, or in this case, the deficit, it's not a deficit. You're actually in a positive. So you're making $50. So you spend $100 on your imports, like you buy things for $100, and you sell it, you export it for $150. So that's your profit. So that's a good business, right? You could pretend these are thousands. So if you spend $100,000 a year on all your expenses, and your revenue is $150,000, you make $50,000 from your business. But the U.S. is not like that. The U.S. imports 100 and they export 90. So that's our profit, -10. We export less than we import. We sell less than we buy. So we're always in a deficit. If you're a country, you'd want to be exporting more, selling more, right? Because then you got cash for those sales, and you can use that cash. You can buy things with that cash. People can live on that cash. But we're such a big country, I guess nobody really cares about the trade deficit. And what country? I'm not sure. Okay, import revenue by country. I'm trying to think of this guy's name. I forgot his name, but he talks about stuff like this. I think he's really good at explaining it. Shit, what's that guy's name? He buys a lot of gold. I can't think of his name. He has a company that makes gold, so he's big on gold. So in this chart, this is from 2022. We import 3.4 trillion, and we export 3.1 trillion. So we're always in a deficit. But China, they import 2.7. And they export 3.5. So they're really profitable. They're positive 800 billion, 0.8 trillion. They're positive 800 billion. So they have 30% margin profit from selling to other countries. So they're in really good shape in the deficit. import export. We're not in good shape, but we're such a big country. I guess nobody really cares. Germany is in good shape too. They export a lot more than they import. Just think of it as a business. Do you want to sell more products or do you want to buy more products? You want to sell more than you buy, right? But we just keep floating the deficit. It's kind of like a company that has like 100 billion in debt. They just keep floating the debt. They just keep taking on new debt to pay the old debt. So maybe next year they have 105 billion of debt because they need to take on 100 billion of debt to pay the old debt, and they needed a little extra for interest. And then the year after that, they have 110 billion of debt. It just keeps growing and growing and growing. Same thing with the US. Keeps getting worse. Well, I know it's 2 different years, but it's pretty much the same. It's the same idea. We're getting deeper and deeper into debt because we have a negative trade deficit, and other countries are getting further and further out of debt. Schiff, exactly. Peter Schiff. Yeah. He's very focused on the U.S. the U.S. government is terrible, and we make so many bad decisions. But I do like him. He's really interesting, and he explains things well. But then why, if our trade deficit is negative, then why are we such a powerful country? This is because that's not the only thing, the trade deficit. We just generate so much money. Our businesses are so successful. Okay, so let's see what else. Raising revenue. Tariffs can be used to raise revenue for the government. This kind of tariff is called a revenue tariff. And it's not designed to, that's interesting, it is not designed to restrict imports. For instance, in 2018 and 2019, Trump imposed tariffs on many items to rebalance the trade deficit. In 2018, the duties received were 42 billion. The next year, it went to 72 billion. So it's a big jump in revenue for the government, 42 billion to 72 billion. And nobody's going to get mad by charging other countries more money. People get mad when you charge US companies more money. But so why are people getting mad that Trump is raising tariffs? Because no matter what Trump does, people get mad. He can never do anything right. Everything he does, people will, even if like say you had 100K in your portfolio when Trump started, and then it goes up 50% to 150K. You would never say it's because of Trump. I'm up 50%. Thank God Trump's in the White House. You would say it's because of Biden and the stuff he did. And let's say your portfolio went from 150 to 140. Then you blame Trump. That's the reason my portfolio is down from 150 to 140, because Trump's tariffs. And then if I said, well, your portfolio is up 40% because it was 100 when he started, and now it's 140. You would say, no, it went up 50% because of Biden, because of the stuff he put in place for Trump. The reason it's down is because of Trump. So that's just how it is. People blame everything, all the negatives on Trump, and any positive, it's not Trump, it's something else. Most people do not understand how important to get the debts down. If we down the amount of taxes collected, will not cover the interest. So we have to do it now. We really can't lower the debt. It'll never happen. We just keep inflating things because we could barely afford the interest on the debt. So we like if we try to restrict inflation, we try to make it so things don't become as expensive anymore, or even go down in price. Then debt is so expensive. Like, think about it. Let's just say you bought a home in the year 2000 for $1 million, right? And now it's 2025. It's still $1 million of debt. Say you still owe $1 million on a home, but $1 million now is a lot less. It's a lot easier to afford. Maybe this is a hard example. Let's just say it was the year 1960, because if you had $1 million home in 1960, your home is like the best home in your entire county. But $1 million home in 2025, it's just an average home in the neighborhood. I don't like this example. I'm having a hard time explaining it. Let's just move on to tariffs. Governments can use tariffs to benefit industries, often doing so to protect companies and jobs. In 2018, Trump imposed a 25% tariff on steel from all countries except Canada and Mexico, because those are our neighbors, Canada and Mexico. So we don't want to we try to avoid creating too much controversy with those two countries, because we're going to import more from our neighbors. It's just easier to get the products over. So we always want to limit contention and keep them happy. So in 2022, Biden replaced the tariff on steel products from the UK with a tariff quota of 500,000 tons. So when there's a quota, we can't go above a certain number. So once we hit 500,000 tons of product imported from the UK, we cannot import any more from the UK. So protecting domestic consumers by making foreign produced goods more expensive, tariffs can make US produced alternatives more attractive. So the more money it costs to import, what's a good product like the battery for the EV or electric vehicle? If it's so expensive to import those batteries, it's just going to make it a lot easier to make it in-house. Some products made in countries with fewer regulations can harm consumers, such as a product coated in lead-based paint. Tariffs can make these products so expensive that consumers won't buy them. There are certain tariffs, like there's certain products you cannot import. There's restrictions. I don't think we can import tobacco. What products are prohibited from importing? So guns, certain fruit, vegetables, animal products, you cannot import those. I think a lot of the reason for animal products is not to save money. I think it's just the risk of like tainted food. So they just want to keep it in farms in the United States. There's more regulation. I think that's the main reason. I don't think we're too concerned about the farmers in the US. What is prohibited to be imported? So if you want a product that that is definitely made in the United States, you could buy a gun, I guess. It has to be US made because we cannot import guns. I mean, you could go online and buy a gun from another country. I'm sure you can do that. I don't know if it's legal, but people do illegal things all the time. But if you're a business, you can't import guns from another country. Like, it would be it would be against the rules. I mean, people buy drugs off the dark web. It's illegal, and you could get in trouble if you're caught, but a lot of people still do it. Almost all fresh fruits and vegetables are prohibited from entering the U.S. So like I said, it's because of the potential pest and disease risks. So it's not so much protecting the business, it's just so people don't get sick and die. This includes fresh fruit and vegetables. So if you're in another country, you can't leave in your bag, you can't have fruits and vegetables. They won't allow it in the United States. It won't pass. But if you go to another country and you buy a notebook, no one's gonna, the person at the border doesn't care about a notebook entering the United States. But fruits and vegetables, it could cause harm. And I mean, it might not just. I mean, obviously, if you got sick and died from eating fruit in another country, of course that's bad. But if you brought fruit into the country and you got like some type of disease and you spread it to someone else, like COVID, that could be a big problem. What do you think about VG Venture Global? Do you think it will be a good long term? I saw the U.S. Treasury needs to refinance $9 trillion of debt maturing in 2025. Now, I don't think that's a problem. Because if you look at the debt historically, because you can't just look at it in a tunnel, you have to compare it to our entire GDP. It's not really going up that much compared to our GDP. It's kind of like what I said earlier. Buffett had $300 billion of cash, right? So if his company was worth $400 billion, if you looked at all his stocks and all his cash, what his net worth is as a company, if it's $400 billion, you would say this is crazy. Almost the entire company is cash. Because if you invest in a company, right, you don't want to see them sitting on a ton of cash. Because why would you buy a company that takes your cash and just sits on it and doesn't do anything with it? You want to see a company grow your cash. So they take your cash and then they buy a product and they make that product, then they sell it to somebody, then they get paid, and they use that cash to make more products and invent new things. You want to see you want to see profits, like an ROE of like 15-20%. But if you look at his company, and I think I might be close, but if he has 300 billion of cash and 1.2 trillion of assets, yeah, he still has a decent amount of cash, but as a percent of his portfolio, it's not like everything. But what? Let's see, BRK. He has a ton of assets. Okay, so I was pretty much on target. 1.2 trillion of assets. That's what I said. That was a good estimate. 1.2 trillion of assets. It says 47 billion of cash, but he has a lot more cash than 47 billion. 47 billion of cash. Maybe it's in a different bucket. That doesn't make sense. How much cash? I thought it was like 300 billion. Buffett have 334 billion in cash. He sold 134 billion in equities in 2024, so 334 billion. So it's still a good amount. I don't know why this balance sheet says 47 billion. There must be cash hidden somewhere else on the balance sheet that we can't see. It's still like 300 over 1200. It's still 25% cash. So it's quite a bit of cash. But actually, I have friends coming over for lunch. So I have to get off, or my wife's going to get upset. But yeah, thanks for joining. I'll see you tomorrow. I'm going to be with Victor tomorrow on his live stream. So hopefully you can make that. And read up on tariffs, because we're going to be talking about a lot about tariffs tomorrow. Okay, thanks a lot for joining.